you doing? Hi everybody, Nala here. This is for week 3. So today we're going to talk about optional gap insurance, optional car insurance coverage. Last week we talked about the minimum required coverage. This week we'll talk about some options you have to better insure yourself against accidents and the financial responsibilities that go along with them. So let's get started. There we go. So just a quick review of liability coverage. Remember, liability coverage does not insure your property and your physical damage. It covers the other person when you're at fault. So if you cause an accident, it covers their costs, which helps you because you don't have to pay for their costs. Otherwise, you have to pay for that on your own. But it doesn't cover your costs ever. Today, we'll talk about how to cover your own costs and make sure that you're protected from that as well. So the first coverage we're going to talk about, and this is a required coverage that, not required, you don't have to buy it, but insurance companies have to tell you about this coverage when you buy car insurance because it's such an important one. So this is, if a driver causes an accident and they are uninsured, then that means there is no money to go around to try to pay for the accident on your side. So you just have your car parked on the side of the road, someone slams into it at 40 miles an hour, totally trashes your car, and they don't have any money. There's no insurance company to help you pay for that damage to your car. You're kind of on the hook. What you can do is you can sue that person. These lawsuits, though, can be really time consuming, expensive, and in the long run, if the person doesn't make very much money, you can't, as they say, you can't get blood from a stone. So you'll have these like small monthly payments for years on end trying to pay back that thing. But in the meantime, you're still out all the money as to replace all that stuff. To avoid this possibility, and they say that there's some estimates as high as 17% of Washington State drivers don't have insurance. So that's like 1 in 6 drivers may be uninsured out there. And the most likely demographic to be uninsured are people that are having a hard time making those premium payments. That's why they're uninsured. So you might be hit by somebody who doesn't have enough money to pay for the accident otherwise. So you can get what's called an uninsured motorist coverage to your policy. So what this does is it kicks in if the other person causes an accident and they don't have insurance. It kicks in as if they did have insurance. So your insurance would cover now the damages to your vehicle caused by somebody else. But only in that case does this policy kick in. Okay. The other one you want to think about is an underinsured motorist coverage. So let's go back to that example we had last week when we had Dave and the Lexus, right? The Lexus owner is pretty upset still because even though Dave's policy kicked in and paid off some of their stuff, their Lexus was worth way more than that $10,000 limit that Dave had on his insurance. So what this would be is if they had an underinsured motorist coverage, your policy would kick in. So if your car was damaged more than $10,000, your coverage would kick in and pay the rest of that cost up to whatever it was. So your coverage would kick in and pay the rest of, I just repeated what I said. So 2 times this is important to have. When you have a car that's worth significantly more than $10,000, because you'll get the first 10 grand. So if your car only has a value of $8,000, don't worry about it. If it's totaled, your vehicle, boom, is going to get paid by the other person's insurance. Especially if you have uninsured motorist coverage, then you'll definitely be protected. And then the other one is if you're traveling with 3 or more people. So if you're going to have 3-4 people in your car a lot, then you might want to think about having this because remember, the liability insurance only covers 2 people and only $25,000 per person. So this underinsured motorist will kick in if those values are exceeded on someone else's insurance policy. Okay, so 2 times we really think about having this kind of coverage. These are great coverages to have. They're not enormously expensive because the chance of being hit by an uninsured motorist and having them be at fault is pretty low. So they're very nice to have in case there is a significant accident. You won't have to make so much out-of-pocket payment for it. All right. Personal injury protection coverage. Now, we talked about liability coverage covering the medical expenses of the other people in the accident. This is the one that covers your medical expenses. So when you cause an accident, you personal insurance, personal injury insurance, or PIP, kicks in whenever you cause an accident and you're hurt, or people in your car, your passengers, are hurt. It kicks in and covers them. You can buy a small amount of this or a large amount of this. There are actually limits that are like $1 million payout limits. You might be thinking, well, that's crazy. Who's going to get hurt that badly? Well, if you get paralyzed, you might have a lifetime of medical bills that's going to be paid here. So while that chance of that happening is really small, the consequence of it is really huge. So personal insurance would kick in there. The more coverage you have, the higher that limit is. When it's, say, $50,000 compared to $1 million limit, it's going to be more expensive every month. So it's a balance of what you need and what you want. Now, this PIP coverage, in Washington State, every insurance company that sells auto insurance has to try and sell this to you, or has to tell you about this. And if you don't want it, you have to sign a form saying, I don't want it. That's true for this and the uninsured motorists. Those protections are so important that they make insurance companies say, hey, I told my client about it and they didn't want it. My advice to you is get these. This one especially, if you get into an accident, the chance of you walking away from even a moderate accident without any medical bills is pretty low, and medical bills get expensive fast. This is going to help you pay for your medical bills. Remember Dave in his accident, he had to pay all of his side of the accident, and that ended up being super expensive. And really hard to come up with that kind of cash. Okay, optional coverages. Now these are coverages that they don't have to tell you about or anything. Honestly, most car insurance people will tell you about these because they want to sell them to you. So collision. If you buy a collision policy, it pays for damage to your vehicle when you cause an accident. So it's like that liability thing, right? So when you cause an accident, you're kind of on the hook for all your costs unless you have collision coverage, and then your insurance will kick in and pay for your vehicle as well. Now, this may not be very worthwhile if your car is worth a couple $1,000s, but if you have a brand new car and it's worth $15,000, $20,000, $40,000, $50,000, all of a sudden it's like, well, this makes a ton of sense, because if I get into that, if I cause an accident, no one's going to help me with my collision or my bills, except unless I have this collision coverage. Now, this coverage will vary in price based on how expensive your car is. So if you have a Tesla and it's a $108,000 car, you're going to be paying a lot every month for this coverage. If you've got a Kia and it's worth $12,000, you'll be paying a lot less. So it really depends on the price of your car. Comprehensive. So comprehensive covers things that aren't collision related. So things like fires and theft and hail and falling rocks and trees hitting your car. And you might be surprised if you came out into your driveway and a tree fell overnight and crushed your car. That's actually not covered by most car insurance policies unless you have a comprehensive policy. So you have to add this on. It costs a little bit more, but these are very unlikely things. So the cost of it is not too bad. Gap coverage. So this only comes into account when you have a car loan. So say you buy a car and you finance it, and you spend $20,000 buying the car, you have a $20,000 loan. 3 months later, the value of your car has depreciated a huge amount when you take it off the lot. So it might go down $4,000 or $5,000 in the first couple months. And then you crash the car, it's totaled. The car insurance company is going to actually just pay you for the value of the car at the time. So they're going to give you that $16,000 of what the car was worth. And you're going to be scratching your head thinking, well, I don't have a car, and I still owe a $4,000 of loan on the car loan I had. Now, that's a messed up thing to have. So when that happens, there's what's called gap coverage, and gap coverage will cover that gap. So if you buy this extra coverage and you crash your car and your loan is more than what the value of the car is, gap coverage will come in and pay off your loan for you. So that's kind of nice to have, but you only need it during those first several years or first couple of years of having a car payment, and then you don't need it anymore. All right, who is covered and when? So this is a little bit tricky. It depends on a lot of different factors, because remember, during an accident, depending on who's at fault and who's doing what and all these different rules going on, a car insurance company may have to pay nothing, or then you have to pay tens of thousands of dollars in claims. So they're going to be very focused on if someone should be covered or not covered. For the most part, you and people listed on your policy, so family members listed in your policy, are covered by your policy when you're driving any of your vehicles that are on the policy and when you legally borrow a vehicle. So if you take someone's vehicle without them knowing, that's called theft, and that is not covered by your policy or any policy in that case. So notice I said listed. Listed's important. If you have a family member living with you and they are not listed as a driver on your policy, they absolutely cannot drive your vehicles. The insurance company will not pay for people that are not on your policy. Because remember, if you add someone to your policy, that increases the risks of your policy, which can increase the premiums you pay each month. If you avoid that increased premium, well, you don't get that increased coverage of having that person covered. So make sure all the cars you're going to be driving regularly and all the people who are going to be regularly driving your vehicles are listed on your policy. Now, that being said, if your cousin borrows your car to go to the store real quick, that can still be covered. That will still be covered more than likely on your policy. The other thing to be worried about, to be thoughtful about, is when you loan someone your vehicle, know that your policy can kick in to pay for an accident they cause. So don't think that just because they're driving that their policy will kick in, yours may also kick in to pay for stuff. So be careful who you loan your car to. It's not some simple thing like, hey, you can listen to my iPod or borrow my phone or something. This is letting someone borrow a car is a very significant financial risk you're taking on. So be thoughtful about when you do that. My advice is don't loan your car out to people. It's going to cause a huge nightmare if there's an accident. Your policy can also cover others borrowing your car. So be careful about that. I just talked about that actually, sorry. So be careful who you loan your car out to. Your policies typically cover rental cars, but not always. So make sure when you buy your insurance policy, when you get your insurance policy, that you just ask about rental cars to make sure that you know whether you're covered or not. Rental car companies also sell their own insurance. So I never get that because our insurance covers it already. So we already have it. It saves us, $40 or $50 when we're renting a car, which is nice. Your coverage, your coverage, here's things that are not covered for sure. So if you use it for commercial use, so you're driving for Uber or Lyft, or you're making deliveries, or you're running pizzas, or anything where you're doing it for making money, delivering newspapers, all those kinds of things. When you use your car that way, it is not covered by your personal thing. You have to get a different commercial policy, and those policies are just priced differently. So it might be more or less expensive depending on what's going on. But they find that people driving for commercial use tend to crash a little bit more, so the policy needs to be a little more expensive typically. Okay. And then any kind of damage caused during the commission of a crime. So if you're driving a getaway car or something like that happens, then your insurance will not cover those kinds of things. All right. Well, that's it for this week's lecture. Next week, what we're going to do is we're going to put all of these to use. So you have information for liability from last week. You have optional cover from this week. I'm going to give you a bunch of scenarios next week, and you're going to kind of go through and price them out and see how much money each side of the accident has to put in based on the types of insurance that they have. So something to look forward to. Have a great week. Try to stay happy and bright and healthy. And I will be online doing a live office hour on Friday from 12:30 to 1. Drop in if you have a question or if you just want to say hi. If the few people show up, then we'll play maybe a quick game of charades or something and have a little bit of fun as well. So hopefully we'll see you Friday. If not, have a great week. We'll see you next Monday with our next lesson. Bye-bye.